The housing bubble here in Miami and Southeast Florida has gotten even bigger. You look around town here, you see there's houses listed on the market for sale at $2-3 million. You see there's rentals on the market for almost $10,000 a month, often on tiny houses like this. And you realize that the bubble in 2024 in Florida, it's still raging. And my fear is that home prices and rents have a potentially long way to fall, particularly in this neighborhood where I am right now. It's in Miami. It's on the border of Buena Vista in Little Haiti. This is an area that's really gentrified a lot over the last couple years. The prices of homes have almost quadrupled since 2015. Think about that. The typical value of a house here has gone from $100,000 to $450,000, but that's just the typical house. We have a lot of homes on the market for over $1 million when you go look on Zillow. And what's wild is that you have homes over $1 million in an area where there's still chickens hanging out in the parking lot. And so you gotta ask, how much has this area actually changed from a fundamental standpoint? Has it actually improved so much to justify how much prices and rents have gone up? Or rather, is it in a big bubble that's gonna come crashing down? The median household income here in Miami-Dade County is $70,000 a year, meaning that the typical local household, maybe they could afford a $300,000 house or a $250,000 house at today's mortgage rates, but certainly they can't afford how much prices have gone up over the last couple years. And it's the same story on rents, everyone. The rents here across the Miami metro, they're now almost as expensive as Los Angeles. The typical rent here is nearing $3,000 a month, which is absolutely crazy, everyone. Miami's now almost as expensive as LA. But when I look around, I don't really get it. I don't really get how it's this expensive. And you can see just walking by here, we have a house for sale. This is actually a multifamily property that's for sale here. $1.5 million actually, and I don't really know who's gonna buy it for $1.5 million because the demand in this area has gone way, way down. You know, this is a location that was really driven by investors. Lots of investors bought into this area during the pandemic. About 50% of the home purchases were by investors. Now those investors are bailing out of the market. And so if the investors are bailing out of the market, you got to ask, well, who's going to buy it for 1.5 million? You know, the locals, they can't afford that. And my fear is that a lot of the people who've purchased in this market over the last couple of years are going to experience a huge decline in value on their assets. Many of them are going to go underwater and get foreclosed on, everyone, because Miami and many parts of Florida is an area where there's lots of foreclosures in a downturn. If we go back to the last housing crash in 2008, we can see the foreclosure rate in Miami went from only 1% in 2006, 2007, all the way up to 14% of all mortgages were in foreclosure by 2010. Of course, when you have those type of big increases in foreclosures, that causes prices to go down, which is why home prices in Miami crashed 50% in the last downturn. Now, I don't think that's gonna happen again. I don't think we're gonna see a 50% crash or a 14% foreclosure rate. However, it's important for everyone to understand, if you're a home buyer investor out there, what the character profile of the area you're looking to buy and live in is. You know, Miami, it's a super boomer bust volatile place, always has, always will be. And it seems like the bust has started now, particularly in this neighborhood. When we look at data on ReventureApp, we can see one of the biggest telltale signs of like the start of a downturn is a big surge in inventory. When the inventory of homes for sale spikes, that's a signal that something has shifted in the market. And as I'm walking here, folks, here's another house for sale. You can actually see the for sale sign over there. This house is on the market for $1 million. It's actually an Airbnb. I just saw some Airbnb guests go in here. And what's interesting is the owner of this house has had it for sale for over a year, and they've cut the price from 1.5 million down to $1 million. So this is an Airbnb operator who's looking to get out after only a year or two. They've had to cut it down to what they've bought it for, and maybe we'll have to cut it down to less than what they bought it for. Because the other thing going on, folks, which I'm sure many of you are aware of, is the Airbnb downturn. That's really impacting Florida. It's impacting a lot of Airbnb owners across America. The demand for Airbnb stays, it's really slowing, while the supply of Airbnb listings is way up. And when you get that situation, you see falling occupancies, falling rates, something that's now pushing many Airbnb owners to have to sell. But they're selling at prices that are still really, really high. $1 million in today's market with mortgage rates of 7%, your payment on that thing would be $6,000 to $7,000 a month. And so here's the important thing to understand also, like if you're a home buyer and investor and you're seeing in your market that the slowdown has started, like here in Miami, but you're still seeing prices really high, understand that that's normal. there's definitely a lag time between when we see the slowdown in buyer demand, the increase in inventory, and then the reduction in prices. Like in this area, in this zip code, despite the fact that inventory has surged over the last year, prices are still up over the last year. There's many owners, many sellers, they don't want to acknowledge the reality that this is a completely different market and that the downturn has started. In this area, the inventory of homes for sale, it's 46% above the long-term average. We have lots of supply, lots of listings, absolutely no shortage of housing here. However, if we go over to South Beach or another area of Miami like Kendall, we can see the inventory is very low. It's down 30, 40, 50% from the long-term average. So what I encourage you guys out there to do is adopt a mindset of nuance with this housing market and understand that different cities and different neighborhoods are behaving very, very differently. And that while home prices in America are still at a record high, they've barely even come down on a national basis, we are seeing a legitimate downturn occur in many cities. And later in this video, I'm gonna give you guys actually some key insights on how to do some research so you can understand where prices are heading in your area. For that, we gotta talk about one massive issue that Florida's housing market is having here in Miami, in Orlando, over in Tampa. Almost every market in Florida is being affected by the property insurance crisis. There is a major insurance crisis here in Florida. The cost of homeowners insurance has spiked by 100% over the last 3 years. So if you're a home buyer, you're gonna buy a house or a condo here in Florida, your average cost of insurance has doubled in 3 years. Went up by 43% in 2023 alone to an average of $6,000 a year for homeowners insurance in Florida. That's the highest in America, according to the Insurance Information Institute. And these skyrocketing insurance costs are now something that's causing many owners in Florida to be forced to sell because they can't afford it. Of course, many homeowners in Florida are older, often retired on a fixed income. Maybe it's a second house, a lot of second homes here in Florida. And so when the costs of owning the second house spike way up, you're gonna see more people have to list and sell their house. This is something that's particularly impacting the condo market. Specifically, the condos and the big buildings, those 10, 20, 30-story buildings in Florida on the beach often that have a lot of different condo units. We're seeing the prices of those condo units start to go down. Redfin just released a report highlighting this. They're showing that in Miami, condo prices are down 5% and are likely to drop by more in the future because the listings are just exploding. We're talking 30, 35% year-over-year increase in condo listings. Those increases in insurance and HOA costs have gone up so much that the people who own these units can't afford it or just don't want to own it anymore. And you got to ask, why are these insurance costs going up so much in Florida? There's examples of people who have HOAs with condo buildings where the insurance bill for the condo building doubled in a year. Why is that happening? Well, it's because the insurers are just dropping out of Florida left and right. Farmers Insurance, they're a big insurance carrier, they left Florida. We have hundreds of other insurance carriers in Florida that have gone out of business over the last several years because it's just not profitable to write homeowners insurance in Florida between the hurricanes that hit, the storms that hit, the damaged property. That's a lot of claims that the insurance companies have to pay out. Moreover, Florida is one of the biggest states for insurance fraud in America. There's a crazy amount of insurance fraud cases where people try to submit fraudulent insurance claims. So the insurance companies are just saying, we don't want anything to do with this as a result. And when you reduce the supply of insurance companies and the supply of policies, that causes the price to go up. And you can see, despite the big increase in condo listings, if you can see behind me down towards downtown Miami, there's still a lot of cranes. There's still a lot of cranes going up with new condos being built. So we have even more supply being built. It's a recipe for a downturn in the market. Now, interestingly, single family homes have held up better here in the Miami area. Single family home prices have continued to go up while the condo prices have gone down. There's still a big lack of inventory of single family homes in certain very desirable neighborhoods. I mentioned Kendall is a desirable neighborhood. Pembroke Pines up near Fort Lauderdale, that's another desirable neighborhood. We're still seeing shortages of homes there, which is why the prices are still going up. And folks, ultimately, here's the model that I want to introduce to you guys. If you're a home buyer or a seller, an investor who wants to understand what are the zip codes to avoid in my city? What are the zip codes to target? I would think of it like this, everyone. If it were me, and I'm a buyer and investor in 2024, I would avoid buying in zip codes that are, number one, heavily overvalued, and number two, have had a big surge in inventory with lots of supply on the market. Because if you're in an area where prices are heavily overvalued, maybe 30, 40, 50%, in this zip code here, prices are 75% overvalued compared to long-term norms. That suggests that it'd be, number one, very difficult for you to see appreciation into the future, but number two, you have a lot of exposure to price downside, especially if the inventory has spiked. Because if the inventory is spiked and is now above long-term levels, lots of homes for sale, lots of listings, no longer would we be able to say low inventory is keeping prices high. Rather, the spiking inventory is a signal that demand has dropped, listings have gone up, and that it's more likely that prices will decline into the future. And what's great, everyone, is that on ReVenture app, you can actually filter zip codes by these criteria. So like here in Miami, we can apply a filter saying, what are the areas that are most overvalued? What are the areas where inventory has gone up the most? And boom, we see a short list of zip codes and neighborhoods to avoid. Conversely, if you're looking to buy in 2024 and you want to buy in an area that's more secure, more stable, let's look at locations that are less overvalued, maybe even undervalued. There's areas that are still undervalued in America, where prices are below their long-term norms relative to income. If you buy in an undervalued market, that means you would actually have appreciation potential and way less of a risk that prices will drop. Well, if you combine buying in a location like that with buying in an area where inventory is low, that means that you're mitigating the risk of prices dropping. Because if inventory is down 30-40% from normal, there's very few listings, that shortage is gonna put upward pressure on prices. So, here in Miami, let's apply those filters in the opposite direction. Let's look at zip codes that are at a max 20% overvalued, and where inventory is at least 20% below long-term norms. And then boom, you could see that these would be the more desirable places to buy in terms of stability and reducing the likelihood that you buy into an area where prices are gonna drop. And what's great is that you folks can access all of that data in those filters for your city, for yourself, right now. Head to www.reventure.app. Type in your city and become a premium member on ReVenture app so you can access the overvaluation data, you can access the inventory surplus and deficit data, and then go to the filters tab, add those filters, and then start searching based on that criteria. The cost of a premium plan on ReVenture app is $39 a month, which is ultimately small potatoes compared to the cost of buying a $500,000 or $600,000 house here in Miami. To www.reventure.app and check out the data right now.